So I mean, if we're looking at the ECB tomorrow, of changing around their asset purchasing program, of increasing the amount of euros in the economy, potentially tomorrow. And then you look at the RBNZ, who are doing the complete opposite. They are reducing the amount of Kiwi dollars in circulation. They are stopping their bond buying program, and they are talking about increasing interest rates. We've got one dovish central bank, we've got one hawkish central bank. So fundamentally, if you hop across to the currency pair of Euro NZD, you would think that that might be bearish. Now, I was looking at this over the last couple of days. We had some couple of bullish candles here. We'd stocks selling off quite heavily on Monday, which will drag the New Zealand dollar lower as a risk sensitive currency. Usually moves in tandem with things like equities, with things like commodities. So the fact that we had equities lower on Monday heavily, with commodities lower on Monday, dragged the New Zealand dollar lower with it. So this will drag this chart higher. Looking at it on Monday, looking at it and yesterday, looking for good levels to sell off. Now, it's all well and good having a bias fundamentally for a currency pair or an asset. We've also got to find the charts aligning with that bias at the same time. So I mean, what I was looking at this morning was straight away 171, got the round number. If I change that to exactly on the round number, we change the color to the daily color of orange. We look at a couple of rejections here. A nice bit of a doji, bit of a shooting star, however you choose to read it. We close today, it'll be an evening star, and it'll be very, very positive for a short position. A bit going on back here, touch here, and then if you can scroll all the way back if you want, with a clear touch there and a very clear touch here. So that is a solid level of resistance at a round number. You know, it's a nice double area of confluence for us to trade off. You know, bring it down to the 4 hour. Again, we see some bearish signals. We had a nice doji bearish engulfing yesterday. They are the candles of yesterday, and another bearish engulfing here. So, you know, clear bearish sentiment off the round number, off resistance. Bring it down to the hourly time frame. What I looked at in this time frame was a nice little reversal candlestick pattern. Left shoulder, head, right shoulder. This would have been your neckline here. That's what I had drawn this morning. I did drop down the time frames, try and find an entry point. Where I entered actually was across here, this little level across here on the 5 minute time frame. You know, we touch here, a few touches here, a bit going on here, definitely a touch there, and then we had another bit going on here. So that was a clear level of support to sell through, where we could put a stop loss. You know, evidently there we touch there, and a nice clear touch all the way back here. So that for me was enough to go short through. You know, ideally if we're trading off a head and shoulders, a reversal pattern, we'd ideally like the neckline broken, but I mean that's a break of an hourly head and shoulders. That all automatically turns into a lot longer term of a trade. So my entry was through there, stop loss was above there, running a bit in profit. You know, stop loss at break even. But really, you know, the fundamentals was the reason for taking that trade. Technicals then aligned clearly with that fundamental idea to then hopefully ahead of time position yourself, stop loss to break even, hopefully to continue on tomorrow. If we get a dovish ECB, you know, maybe a bit late on the entry through the head and shoulders neckline, but if we go wait till tomorrow and we do get a dovish ECB, the best pair to trade will definitely be Euro NZD. That's how you can try and piece together. That's how we can try piece together a bit of strength with a bit of weakness to find the most high probability trading opportunities.